how have my index funds performed so far in 2022? If you've been investing or following the stock market at all, you know it's been very volatile and a bit of a roller coaster so far this year, mainly because of the war in Europe, rising inflation, rising interest rates, and everything else. So I thought now, 3/4 of the way through the year in September, I thought it'd be a good position. I thought it'd be a good time to look at my index funds and see how they've actually performed so far year to date. We're going to be going into my Vanguard portfolio, seeing essentially what I started with, what I contributed, and now what I have, and see whether I've lost or made money. If you're just watching this video now, maybe leave a comment quickly whether you think I've actually lost money or made money over the year. I'm going to come on to that in a minute. Might be surprised, and it's actually more close than you think. Before we get into all of that, of course, if you do like the video, smash the like button and subscribe so you don't miss any future videos. And even before we get into my actual performance, I just want to talk about index funds, give a quick overview about them, and kill a few misconceptions about them as well. So if you follow me at all on any social media platform, I also am on Instagram, TikTok, Twitter, and all other platforms as well. If you do follow me at all, you know that pretty much 98+ % of my investments in the stock market are in index funds and ETFs, and they're essentially a broad, diversified basket of stocks. Rather than investing into one stock, for example Apple, I can invest into the S&P 500, which is the 500 largest companies in the US stock market. I then personally take that one step further and use global index funds, as we're going to come on to, where I invest into 7,000 companies all around the world, in every corner of the world, so I'm globally diversified. It makes my strategy very passive because I don't have to be researching individual stocks. Also, over time, if you look at the history and the data, and people will obviously argue with me on this, but you generally get better returns and lower risk because index funds tend to outperform both active fund managers and individual investors like yourself and me. Not to mention, index funds are also very low fee, they are very convenient, hands-off, stress-free compared to, as I already mentioned, checking the stock market every day. You don't have to have index funds, you literally just buy once a month or as much as you want each month, buy and hold for the long term, and that's all you need to do. And that's what I've done for 5 months, and I've managed to build my portfolio from zero to tens of thousands of pounds simply by doing that as the crux of my strategy. That's a bit of basics and background when it comes to index funds. One misconception I wanted to kill though is that with index funds you can still lose money. People think because you're buying a diversified basket of stocks you can't lose money, or because index funds are talked about quite a lot nowadays, people think they're almost magical where you can't lose money. You still can lose money, but because you're not investing into individual stocks and you invest into hundreds, if not thousands, it's much more unlikely to lose money over the long term. I think there's been a study done that actually showed over a 20-year period, the S&P 500 has never lost money, or if you invest for 20 years, you have a 99% chance of making money because the stock market goes up, generally speaking, over time. You can still lose money, and you will almost certainly lose money in the short term at points. For example, when there was COVID, for example, when there was a war that got started earlier in the year, for example, when inflation in the UK is now at 10%, which is crazy and not been seen in decades. When the economy is doing bad, the stock market and index funds will of course come down, but the point is, investing consistently over the long term, you will slowly make money and slowly build your wealth, and that is the beauty of index funds. It requires no knowledge, no skill, no time. You set up a monthly automatic investment, and that's all you need to do, and that's essentially what I've done, and how I've built my wealth from, as I said, nothing to now 5 figures over the last few years. But let's get into the actual numbers then, probably what you came here to watch this video for. Let's actually see how well my portfolio, and specifically my index funds, or I say my index funds are my entire portfolio when it comes to Vanguard, and this is my stocks and shares ISA and my SIP. All of my money is in one fund, and if you've followed me for a while, you're probably sick of me saying this now, but it's the FTSE Global All Cap, a globally diversified index fund with 7,000 stocks. All of my money in both accounts, my stocks and shares ISA and my SIP, is in this one fund. And although I do portfolio updates every now and then, I thought it'd be interesting to see, because of all the crazy volatility and crazy times we're in, if my index funds have actually made money so far this year in 2022. So as you can see on the screen now, I started with £18,200. I contributed roughly £12,500, and I've actually lost £68, which essentially means my rate of return for 2022 is minus 0.28%. So if you commented down below at the start saying you thought I'd lost money, congratulations. Yeah, it's not good for me, but you won this one, so well done. But there's a few things worth saying straight away. First of all, of course, the short-term performance doesn't actually concern me because I'm investing for the long term. Secondly, over the long term or the medium term, well, I've had this account now for 4 years, I've made money. And looking over the course of the last 4 years since I've had this account open, and through that I've gone through the late 2018 crash, I went through the 2020 COVID crash where the market dropped 30%. I went through the crash earlier on in the year and really the volatility in 2022 with the Ukraine war, with high inflation, high interest rates, all of that. And I've still made £2,352 over that period. So even though I'm down in the shorter term, I'm still up over the more medium term. And I'm sure over the longer term, I'll hopefully be up even more than that. But bringing it back to my actual rate of return so far in the year, it's minus 0.28%. And there's a few more things worth saying as well. But bringing it back to my rate of return in the year, as you can see, it is negative, only just, but it's actually worth looking and seeing what the market is doing. And you'd be surprised, I've actually done better than some indexes have so far this year. For example, as you can see, the S&P 500 year to date is down 18%. VWRL, the FTSE All World, which is an ETF that's similar to the FTSE Global All Cap, is down 8% year to date. The FTSE Global All Cap itself is actually also down about 2% year to date. So all those three indices, the S&P 500, the FTSE All World, and the FTSE Global All Cap, although I've got a negative return like those three, my return is actually better than that, albeit still negative. But that is because I've been dollar cost averaging and investing regularly. Now this brings me on to lump sum investing versus dollar cost averaging, which you may have heard before, but there's two sort of approaches you can take to investing. You can invest a lump sum in one go. Say you had £10,000, you could put 10 grand in on one day, or you could dollar cost average and drip feed that in over time. For example, £1,000 a month for 10 months or £500 a month for 20 months. Generally speaking, lump sum investing performs better 2/3 of the time, but me personally, I haven't got a lump sum to invest. I invest every single month. I put £650 into my stocks and shares ISA and £400 into my SIP every month, so I'm automatically investing regularly. And when the market is going down, I'm of course buying at lower and lower prices. So what's essentially happened here, I've been buying at some of the lower prices earlier in the year, and then where the market has rebounded, I'm now almost breaking even because I'm investing regularly. Whereas over the course of the year, if you're looking linear and it's obviously going up and down, it's volatile, the market is still down year to date. Whatever index you're looking at, it's still down year to date. However, I'm only slightly down, and that is, I guess, the impact and the benefit of buying regularly and almost setting up that automatic payment and ignoring the market. Had I tried to time the bottom, I would probably still be waiting. I may never have invested. I may have an even worse return because I simply set up an automatic monthly direct debit and a payment, and that's all I do. I'm actually not that worse off. But saying that, I'm nearly breaking even, but I'm still done on my investment. So that's essentially how my index funds have performed in 2022. So far in the year, I'm down 0.28%. But to be honest with you, I'm pretty hopeful that by the end of the year, I should be in the positive and back in the gain. Of course, as I mentioned, over my lifetime investing, I'm still up, so that's a good thing. But it's interesting to look at this sort of information and just see how your portfolio is doing from time to time. Let me know in the comments how your portfolio is doing. I'll be interested to hear, as always. Thank you for watching, and I'll see you in the next one.